Welcome back, champions. Another mind-boggling stock news. Volatility has returned to Wall Street after a solid rally in the first 2 months of the year. Inflation rose once again in February, dampening investors' morale on fading hopes of a rate cut anytime soon. The Labor Department reported last week that the Consumer Price Index, CPI, rose 0.4% sequentially in February, higher than January's rise of 0.3%. February's jump was also the most since September 2023, after which inflation declined steadily to fall below 3% before climbing again in January. Given this situation, it would be wise to invest in these 5 defensive consumer staples. Number 1. The Clorox Company. The Clorox Company is engaged in the production, marketing, and sale of consumer products in the United States and international markets. Clorox sells its products primarily through mass merchandisers, grocery stores, and other retail outlets. The Clorox Company has an expected earnings growth rate of 5.6% for the current year. The consensus estimate for current year earnings has improved 21.6% over the last 60 days. Number 2. Grocery Outlet Holding Corp. Grocery Outlet Holding Corporation is a high-growth, extreme-value retailer of quality, name-brand consumables and fresh products that are sold through a network of independently owned and operated stores. Notably, GO's stores offer a fun, treasure hunt shopping experience in an easy-to-navigate, small box format of size 15,000 to 20,000 square feet. Grocery Outlet has an expected earnings growth rate of 10.3% for the current year. The consensus estimate for current year earnings has improved 2.6% over the last 60 days. Number 3. Molson Coors Beverage Company. Molson Coors Beverage Company, the global manufacturer and seller of beer and other beverage products, has an impressive diverse portfolio of owned and partner brands. Taps brands include global priority brands such as Blue Moon, Miller Lite, Coors Banquet, Coors Light, Miller Genuine Draft, and Staropramen, as well as regional champion brands like Carling and Molson Canadian. Molson Coors Beverage Company's expected earnings growth rate for the current year is 4.2%. The consensus estimate for the current year earnings has improved 4.6% over the past 60 days. Number 4. Tyson Foods. Tyson Foods is the biggest U.S. chicken company and produces, distributes, and markets chicken, beef, pork, as well as prepared foods. Tyson's products are marketed and sold primarily by sales staff to grocery retailers, grocery wholesalers, meat distributors, military commissaries, industrial food processing companies, chain restaurants, international export companies, and domestic distributors. Tyson Foods' expected earnings growth rate for the current year is 74.6%. The consensus estimate for the current year earnings has improved 23.2% over the past 60 days. Number 5. Pilgrim's Pride Corporation. Pilgrim's Pride Corporation is engaged in the processing, production, marketing, and distribution of frozen, fresh as well as value-added chicken products. PPC offers its services in the United States, Mexico, France, the Netherlands, Puerto Rico, and Mexico through a number of distributors, retailers, and food service operators. Pilgrim's Pride's expected earnings growth rate for the current year is 68.6%. The consensus estimate for the current year earnings has improved 14.9% over the past 60 days. Would you take this golden opportunity to invest in these stocks? Let us know in the comments.